Phi. The year is 1929. The date is October 29th. As the streets of Manhattan echo with the panicked cries of ruined men, one man sits in a locked office on Fifth Avenue, enveloped in total silence. His name is Jesse Livermore. On this day, the American financial empire bled to death. Fortunes built over generations vanished in a matter of terrifying hours. The ticker tape did not just record prices, it recorded the screams of a dying market. Yet, as the world burned, Livermore did not panic. He did not hope. He did not pray. He looked at his sheets, checked his ledger, and realized he had just made $100 million in a single afternoon. Visual, cut to a wide shot of the silhouette of a man looking out a tall, arched window overlooking a dark city street. The camera slowly pushes in on his back. Faint reflections of stock ticker numbers overlay across the glass. Narrator, VO. How does a man look into the abyss of total economic apocalypse and walk away with a king's ransom? The answer does not lie in a secret mathematical formula. It does not lie in insider information, nor does it lie in blind, reckless luck. The answer lies in a brutal, uncompromising truth that 99% of human beings are structurally incapable of accepting. The market is not a game of math, it is a game of human psychology. And your greatest enemy is not the market maker, the broker, or the manipulated newser, the person staring back at you in the mirror. Visual. The camera moves sharply into an extreme close-up of a human eye. Within the iris, we see the reflection of a ticker tape ribbon moving rapidly. The screen glitches slightly, transitioning into modern digital green and red charts. Narrator, VO. Welcome to the masterclass. What you are about to experience is not a collection of cheap trading tips. This is a deep dive into the architecture of the 1% mindset. It is the resurrection of a century-old trading philosophy designed for one specific purpose: to separate your capital from your humanity. If you look at charts today and feel excitement, you are an amateur. If you look at a losing trade and feel pain, you are a victim. If you look at a winning trade and feel proud, you are a target. Over the next 5 phases, we will dismantle the illusions of modern trading. We will strip away the noise of indicators, social media hype, and emotional volley. Sion. By the time this journey is complete, you will no longer see prices as numbers. You will see them as the physics of human behavior. You will no longer view your trading strategy as a tool to make money. You will view it as a fortress to protect you from yourself. Prepare your mind. Let us step inside the mind of the boy plunger. SFX. A heavy iron door slamming shut, followed by the echoing chime of a grandfather clock. Act 2. The anatomy of the 1% mindset visual. A dark, conceptual graphic grid appears on screen. A single white line begins to track left to right, completely flat, unwavering. Suddenly, a chaotic, jagged red line starts violently looping above and below the white line, simulating wild market volatility. Narrator, VO. To understand the physics of price action, we must first understand the structural defect built into every human brain. Evolution did not design human beings to trade markets. Evolution designed human beings to survive in the wilderness. When our ancestors saw a predator, their bodies flooded with cortisol and adrenaline, screaming at them to run. When they found a fruit tree, their brains flooded with dopamine, telling them to consume something immediately before someone else did. This exact biological wiring, the precise mechanisms that kept our species alive for 100,000 years, is the exact reason why 99% of traders lose all their money within their first year. Visual. A stark, high-contrast text graphic appears on screen, displaying the words, "The reversal of human instinct." Narrator, VO. In the market, your natural human instincts are an executioner's noose. Consider the anatomy of a failing trade. A retail trader buys an asset. The price begins to drop. The logical, systematic action, the action dictated by any mathematically sound system, is to cut the loss immediately, to admit defeat while the damage is small. But what does human biology do? Biology triggers hope. The trader tells himself, it will come back. It's a good company. It's just a temporary dip. Hope mutates into an obsession. The asset drops further. Now the trader is paralyzed by fear. Not the fear that makes you run, but the fear that freezes you in place. They refuse to look at their portfolio. They become an involuntary long-term investor. They pray to the market gods for a break-even price that never comes. Finally, at the very bottom of the crash, when the psychological pain becomes completely unbearable, they capitulate. They sell everything at the absolute worst possible moment. Visual. The chaotic red line on the graphic drops to zero. The steady white line remains completely unchanged. Narrator, VO. Now, consider the inverse. The anatomy of a winning trade. The same retail trader buys an asset. The price jumps 10% in their favor. The systematic action is to let the trend run, to maximize the edge, to hold until the system gives an exit signal. But what does biology do? It triggers greed wrapped in the clothing of anxiety. The trader thinks, what if I lose this profit? What if it drops back down? I need to lock this in right now so I can feel like a winner. They sell immediately, capturing a tiny fraction of a massive macro move. Do you see the structural tragedy? The untrained human being does the exact opposite of what survival in the markets requires. They hold their losses with infinite patience, and they cut their profits with terrifying speed. They tolerate massive risk for no reward, and they flee from massive reward out of fear of minor risk. Archival footage of Jesse Livermore was frat, liking down a street in New York, dressed impeccably in a three-piece suit, unbothered by the reporters surrounding him. Narrator, VO. Jesse Livermore recognized this defect early in his career while sitting in the bucket shops of Boston. He realized that the ticker tape was not a reflection of fundamental value, earnings reports, or economic data. The tape was a physical printout of human psychology. It was an ongoing record of greed, fear, hope, and ignorance. He wrote a rule that should be carved into the desk of every individual who dares to risk a single dollar in the markets. The market does not change because human nature never changes. The same patterns repeat because men cannot control their emotions, and their emotions consistently destroy their intellect. To enter the elite 1% of traders, you must undergo a profound psychological mutation. You must train your mind to feel absolute discomfort when you are breaking your system, even if the trade is making money. And you must feel absolute peace when you are executing your system, even if the trade loses money. You must stop trading the P&L and start trading the process. Act 3. The myth of predictability visual. A FINT age of modern financial news anchors shouting, flashing red and green numbers, complex indicators with hundreds of colorful lines overlaying a chart, RSI, MACD, Bollinger Bands, moving averages all crowded together until the price bars are invisible. Narrator, VO. Look at the modern trading landscape. It is a circus of illusions. The amateur trader approaches the market with a flawed premise. They believe the market can be predicted. They spend thousands of dollars on algorithmic software, complex indicators, and economic newsletters, searching for the holy grail, the system that will tell them exactly what will happen tomorrow. Let me shatter this illusion right now. With the weight of a century of trading history, no one knows what will happen tomorrow. Not the Federal Reserve, not the billionaire hedge fund managers, not the AI algorithms, and certainly not the social media gurus. Visual. The messy chart with hundreds of indicators is violently cleared away with a swift sweep effect, leaving nothing but bare, raw, stark white price bars on a dark gray grid. Narrator, VO. Jesse Livermore did not try to predict the future. He was a market observer, not a market prophet. Phi understood that price action operates on the laws of probability, not certainty. Think of the market as a massive, unending river. The physics of price action dictate that water will flow along the path of least resistance. If there are more buyers than sellers, the line of least resistance is up. If there are more sellers than buyers, the line of least resistance is down. Your job as a trader is not to guess where the river begins or where it ends. Your job is simply to step into the current when the flow is clear, and step out of the current when the water turns violent. A stylized diagram appears illustrating this concept. A simple vector graphic showing a path with a boulder blocking one side, forcing a stream of energy around it. Narrator, VO. When you believe you can predict the market, you develop an ego. You become emotionally attached to your analysis. If you analyze a chart and conclude that an asset must go up, you have just laid a psychological trap for yourself. When the price starts dropping instead, your ego refuses to accept reality. You view the market as wrong. You view the market as manipulated. You start fighting the trend. You short a rising market because you think it's too high, or you buy a falling market because you think it's too low. Livermore called this the speculator's vanity. The 1% trader has no vanity. They do not care about being right. They only care about being aligned with the line of least resistance. If the system says buy, they buy. If the system says exit, they exit. They do not argue with the tape. To argue with the tape is to argue with gravity. It is an exercise in absolute futility. Act 4. The sovereignty of the system visual. Deep cinematic close-up of an old mechanical watch movement. The tiny gears turning flawlessly, tooth interlocking with tooth, completely immune to external noise or temperature. Narrator, VO. If prediction is a myth, what is the alternative? The alternative is the sovereignty of the system. A true trading system is not just a set of technical rules. It is an externalized brain. It is a cold, calculated, unemotional machine designed by your rational mind during hours of calm isolation, specifically engineered to govern your irrational mind during moments of extreme market chaos. Think of it this way. When you are in a live trade and the market is moving fast, your cognitive fatigue drops by 50%. You are under psychological assault. You are experiencing the physiological symptoms of stress. Your pupils dilate, your heart rate rises, your prefrontal cortex goes dark, and your amygdala takes the wheel. You are, for all intents and purposes, clinically insane. Therefore, a 1% trader never makes a creative decision during market hours. Every decision where to enter, how much to risk, where to scale in, and where to exit must be decided before the market opens. The system handles the execution, the trader merely handles the discipline. Visual, a historical black and white photograph of Livermore's private office. There are no quotation boards visible to the public. No noise. Just a massive table with custom printed ledger sheets. Narrator, VO. Livermore's system was built on patience. He would wait weeks, sometimes months, for the market to develop a clear, undeniable trend. He famously stated, "It was never my thinking that made the big money for me. It was always my sitting. Got that? My sitting tight." In the modern era of instant gratification, this is a forgotten art. Traders feel they must trade every day, every hour, every minute. They mistake activity for productivity. They see a minor wiggle on a 5-minute chart and feel compelled to risk their hard-earned capital. They are addicted to the dopamine hit of the transaction. They are not traders, they are gamblers looking for a casino that fits in their pocket. The system of Jesse Livermore demands that you treat capital as ammunition. If you fire your ammunition at every passing bird, you will have nothing left when the apex predator arrives. You must master the discipline of doing absolutely nothing until the market reaches your specific, predetermined trigger points. Act 5. The price of discipline visual. A powerful, slow panning shot over an empty trading floor at dusk. Papers strewn about, computer screens glowing faintly in the dim light. The music drops to a single, somber, resonant piano chord that lingers. Narrator, VO. Let us speak plainly about the cost of this life. The path of the 1% trader is lonely, monotonous, and psychologically punishing. The world wants you to believe that trading is about fast cars, luxury penthouses, and effortless wealth. They show you the lifestyle, but they never show you the cemetery of broken souls who tried to achieve it without discipline. Discipline is not a switch you turn on when you open a chart. It is a lifestyle. It is a systematic philosophy that must govern your entire existence. If you are undisciplined in your daily life, if your diet is chaotic, if your sleep schedule is broken, if your finances are unmanaged, if you cannot control your impulses in the physical world, what makes you think you can control your impulses when you are placed in front of a live market chart designed by the brightest minds on earth to extract your cash? Visual. The text on screen fades in slowly. The ultimate trading truth. Narrator, VO. Every time you break your system, every time you move a stop loss, every time you take a random trade out of boredom, every time you risk too much because you want to make up for a past loss, you are telling your subconscious mind that your system does not matter. You are training yourself to fail. You are digging your own financial grave, one emotional decision at a time. Jesse Livermore's greatest triumphs came when he followed his rules to the letter. His greatest tragedies, including the moments that stripped him of his massive fortunes, occurred when he allowed his emotions, or the opinions of others, to breach his operational fortress. He lived as a monument to the absolute supremacy of market law. Visual. The camera slowly pulls back from a massive vintage office window, moving out into the cold, foggy skyline of New York City. The titles fade in cleanly over the dark sky. Narrator, VO. This is the end of Phase 1. You have stood at the edge of the abyss. You understand the philosophy. You know that you must kill your own humanity to survive the market's brutality. But understanding the philosophy is not enough. You must know the mechanics. In Phase 2, we will pull back the veil on the exact technical blueprint Jesse Livermore used to read price trends. We will explore the mechanics of the pivot point, the structure of the danger line, and the mathematical rules of scaling into a position. If you are ready to leave the emotional 99% behind and step into the systematic world of the 1%, prepare yourself. The masterclass is just beginning. Acknowledge the defect. Accept that your natural human emotions, hope, fear, greed, are designed to destroy your capital. Kill the vanity. Stop trying to predict where the market will go. Focus entirely on reading where fede. The line of least resistance is right now. The external brain. Never enter the market without an absolute rule-bound execution strategy created during calm isolation. Patience is capital. Recognize that doing nothing is a valid, high-yield trading position when the market lacks a clear trend. A dark, minimal digital interface. A single horizontal line glows a crisp, electric blue across the center of the screen. Above it, the text reads, "The line of least resistance." A series of white price bars violently approach this line from below, stall, and retreat. AUD fun O/SFX. The slow, steady, rhythmic ticking of a vintage wall clock tock tock tock. The ambient cello drone from Phase 1 returns, but it is now joined by a sharp, rhythmic synth pulse, signifying calculated execution. Narrator, VO. The amateur trader looks at a chart and sees chaos. They see a jagged mountain range of green and red bars moving without rhyme or reason. They look for patterns in the noise, inventing stories to justify their trades. But to the 1% trader, the chart is not a canvas of random chaos. It is a battlefield of supply and demand governed by structural geometry. Price action is nothing more than energy, phi, moving through a channel. When that energy meets an overwhelming wall of selling pressure, it stops. When it consumes that selling pressure, it breaks free. Visual. The white price bars on screen suddenly pierce through the electric blue line. The moment of breakthrough flashes bright gold, and the line itself turns from blue to a solid, anchoring white. Narrator, VO. Jesse Livermore did not view support and resistance as abstract concepts. He viewed them as physical barriers. He understood that the market spends 80% of its time trapped in aimless consolidation brackets draining the capital of impatient speculators. The real wealth is not made inside the bracket. The real wealth is made when the market breaks the bracket and enters a state of unhindered velocity. To capture these macro movements without guessing, Livermore developed a precise technical framework centered around three structural pillars: the pivot point, the danger line, and the pyramiding matrix. This is the mechanical engine of his system. It requires no intuition, no opinions, and no emotional interpretation. It requires only the cold, unblinking execution of a machine. Act 2. Unlocking the pivot point V1's U, phi. AL. The screen transitions to a clean macro view of a candlestick chart. The market is trending down, hits a floor, bounces up, falls back down to the exact same floor, and stabilizes. A bright neon yellow circle illuminates this double bottom floor. Text appears. The pivotal point of accumulation. Narrator, VO. Let us dissect the anatomy of Livermore's most sacred technical discovery. The pivot point. A pivot point is not a random high or low on a 5-minute chart. It is a psychological milestone on a macro time frame, a price level, where the balance of power between buyers and sellers undergoes a violent, permanent shift. Livermore categorized pivot points into two distinct types: the reversal pivot and the continuation pivot. The chart animates to show a massive macro downtrend. The asset has been falling for months. Suddenly, it hits a price level at call it $100 and bounces violently to $120. It then drifts back down to $102. Volume dries up entirely, and it holds. Narrator, VO. This is a reversal pivot point. The market has tested the absolute floor of supply. The fact that the price could not make a lower low proves that the sellers are exhausted. the smart money. The silent institutions have placed a net under the market. But the amateur trader makes a fatal mistake here. They try to buy the absolute bottom at $100. They try to catch the falling knife. They think, it's cheap, it can't go any lower. Livermore never bought the bottom. He considered buying the bottom.